Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look back at the S&P Wyckoff distribution theory and how that's played out over the last few weeks. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade at your own risk. So here we have the SPX S&P index on a weekly chart here. And this is our old chart from what was it, back here in August, end of August. We drew this one up, and just like we said, basically we had gotten the upthrust, pulled back down here, tested the support, came back up and failed to put in a new high. So as soon as that failed, we knew that was going to sell back off. And what's going to happen here is we've come back to the top of that resistance range, and we're literally at it right now, getting ready to close. If we can find support here and potentially move up, I would love to see that happen, and maybe get another year or two out of this trend here. But again, I think what's likely to happen here is we're going to test this support. It's going to fail, and then we're going to drop back down to the second resistance level, test that as support, and then that's going to fail, and then we're going to start getting our sell-off back down here. But we're keeping a close eye on it. We were, in the last video, we talked about how we were expecting to get another test up here, another move up. I look at that as a sign of weakness, the fact that we couldn't break back through. Because here, basically, we had tested it, and broke through. But that's a fake out to me. If we sell back off violently and even go below that support level at all, that's a fake out to me. So when we dropped all the way down here, we were expecting to find support on the moving averages, but then we popped back up, and then if we could have put a new high here, I could have potentially gotten bullish with some follow through and some volume coming in. But because we failed to put that new high, that's a sign of weakness now in phase D. So we're officially in phase D as far as I'm concerned at this point in time. We're just waiting on confirmation, because as soon as we come down here to like that 2800 range, when we break through this right here, this range, and we come down, it's going to violently sell off, because people are going to realize, the hopes and dreams are getting crushed. And again, if we start moving to the top, it's the same thing for the people that are betting on us going down here. They're going to realize real quick what's going on, and then we're going to get that continuation. Whichever direction we move in, we're going to get a massive amount of continuation. But with so much uncertainty going on right now, and the global market's just in absolute shambles, negative interest rates, all this crazy stuff going on here, it's going to be hard for them to prop this market up for much longer. So we'll see what happens. People are getting hip to all their tricks and everything, and all this money printing and everything, all the problem with the repos and the interest shooting up to 10%. I mean, all this extra money, is basically just weakening the economy further. It's just holding the game, a little bit longer. We're playing in like super overtime right now, and eventually, the clock's going to hit zero. So hopefully we'll get another move back up here. We can find support and, get a couple more years out of this thing. It's better for the world if we have a strong economy, obviously. But again, at this point in time, that looks like a sign of weakness to me. I think we're going to come down here, find some support on the moving averages, and then that's going to be basically our last point of supply in this range, and then we're going to get our first level of markdown. But after testing this top support range here, the likelihood that we at least come down and test the 2550 range is extremely likely. Because what happens is you come up here, support, resistance, support, resistance a little stronger, support a little weaker, because you went a little higher, a little lower. So now we have this full range here developed. And then when we come up, test the top of the range, find support, test the top of the range, and break it, you expect to see continuation here. If you don't see continuation here, because if you see continuation, you could call it Wyckoff accumulation. But when you don't see that continuation come in and it sells off like that, that's a sign of weakness, and that's an upthrust after distribution has taken place. It's basically, either one last chance to break out to new highs and keep the trend going, or it's one last chance to basically sell off your assets and leave it in somebody else's hands. So you sell the top and they buy the top. But at this point in time, without continuation, without a massive move and volume coming in, if we don't find support right here in this old resistance range, if this doesn't hold up, if we even wick down below into here, that tells me we're selling off. And at that point in time, what the targets are. You've seen the moving averages. You can see where the support is. this isn't going to happen overnight. It's going to be a process, but it's going to start getting more violent whichever way it moves in, because this consolidation has taken place for so long. I mean, basically at this point in time, we're a couple months away from 2 years in this consolidation range. So if we break down here, if we do anything but break up here, if we just continue to consolidate or range or break down here, I mean, this is going to end up being over a 2-year plus range of consolidation. So whichever way we do move after that, it's going to be massive, and we're going to get a ton of continuation. So regardless, the fact of the matter that you're even looking at this right now, seeing it, or that you're following this asset class, basically tells you that you're just going to get on the right side of an amazing trade. You don't have to rush into it right now and get chopped up in some of this other stuff. You can just wait for the big move or position yourself for the big move. So, again, not financial advice, but you could be taking shorts through this part right here and taking longs through this part right here. So you're basically just shorting resistance and buying support. And then as it continues to just range around, you're getting a good entry price. You're taking profits along the way while we just consolidate. And then whichever way it does break, you're going to be positioned in phenomenal position, because you basically had either sold the top or bought the bottom prior to the breakout. So again, not financial advice. It's just more of like a strategic thing. Can be used in any markets. It's just one of my things I do. And again, I was talking about how I like to enter and exit trades. Is a lot of times when we put in the high right here, like for instance, we put in this high right here, and then we start coming to it, people are putting their stop losses right here. So if they shorted this right here and then put their stop loss here, it hits their stop loss, pumps up again, and then they're out of the trade, and then all of a sudden it sells off violently. Same thing here. If people took a long off this support area, it breaks through here, hits their stop losses, sells off violently, and then again bounces straight up, and then we get continuation. So again, that was our high. We break through it just a tiny bit, hit people's stop losses, and then it sells off, and then we can come up and get them in the right end of the trade here, and again we put a new high, sells off, and then this time we don't get the high. So when we sell off here, you can expect people are basically going to be putting their stop losses here or here or here. So what's going to happen every time is we're going to come down, break it by a little bit, we'll get our next bounce. Come down, break it by a little bit, we'll get our next bounce. Because all that's doing is it's just taking people out of the trade. So, it's easier to move in the correct direction, because a lot of times it takes them out in one direction, puts them in the other direction, and then they just got double psyched out when really they had the direction right in the first place. So it's just something you see all the time watching these markets. And, it's like a heartbeat. It's always going up and down. It's never just going in one direction straight up. Even when you're in a nice strong uptrend, you're still getting the heartbeats, the pulses. So that's what you want to pay attention to, and you don't want to get chopped out and taken out of a position in that. But again, that's not financial advice. That's Wyckoff distribution theory on the S&P 500, the SPX index. That's our weekly chart here. And we're basically just touching back in. We got the test back up to the top like we were talking about. We got the sign of weakness, failure to break to a new high. Now we're getting sell-off. When these supports start breaking through here, we're going to see that last point of supply, and we'll be able to confirm that we did in fact go into phase D and distribution's taking place, and we're going to basically start getting our markdown phases through here. So that's it, Crypto Trend Trader. Thanks for checking us out again. Give us a like, support, subscribe, comment, whatever. It really helps out the channel. And stay tuned for updates, guys. Thanks a lot, Crypto Trend Trader, signing off.